Hello again, this is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Wednesday, October 7th of 2020. A lot has happened in the last 24 hours since we did our daily updates, and that's why we bring our daily updates to you. So let's get right to what's moving markets. Thanks for watching. So there you have it. From the time that I actually submitted my daily update, we had a presidential tweet that basically sent the market selling off, from it was up a couple hundred points and down a couple hundred points. I think it was a plus or minus 600 point swing throughout the day. It just goes to show you the volatility, and ultimately the take home point was President Trump at that moment in time instructed the Republicans to basically back away from the table and cease the stimulus talks or the CARES 2.0 talks, and that sent the markets just selling off. What was interesting is that we actually had light volume. So even though we had a sell-off in the afternoon, light volume, and as I reported yesterday, markets were touching around the 3,400 on the S&P 500, which is a very key technical level, right? We had technical Tuesdays. Well, we start today's trading day and we're up 500 points because overnight news cycles report that maybe not the same size of the deal, but a deal, maybe there's still time to get something done. As President Trump basically tweeted and reported, he specifically wants the dollars to go in the hands of those that need it, small businesses specifically, and sort of the households that need the additional money to tie them over, which is, you can't really disagree with that, because why would you spend, $2.2 to $2.3 trillion if you really don't know what's in it, and if you really don't agree with where the money is going? So they're basically, the art of the deal maker is at it again. As I said, and I keep reporting, don't hold your breath on this one, right? That's what I've said sort of weeks and almost months back past the July 31st expiration of the original. So consistent on the don't hold your breath. But markets are up nonetheless, because regardless, before or after election, it's pricing in some sort of assistance where it's needed. And we could all agree to that. Now, the rate of change is changing. That's kind of the first topic as we're discussing. With what that we mean, I talked about the rubber band effect. If you stretch a rubber band, it's going to snap back really quickly. That's happening in a V-shaped recovery. We're seeing that all aspects of the U.S. economy, from manufacturing to consumer confidence, even employment picture. But the unemployment picture and the economy and jobs, that sort of seems to be the bigger issue here, i.e. the reason why we need sort of the targeted stimulus for the small businesses. Small businesses are just trying to survive, right? We're having sort of some rollbacks and some reinstatement of shutdowns across the United States in certain areas, certain states. That's going to slow the growth of an opportunity for a small business owner, think like a restaurant, even to survive. So they do need the additional stimulus. In fact, the FMOC meeting minutes were released today, and that resulted in just that. If you had Jerome Powell, the head of the Federal Reserve, he specifically asked for additional fiscal stimulus. So he's asking, monetary policy is there, but fiscal has to do their job, meaning Congress get to work and President get on board with whatever you guys decide, get something in the hands of those that need it. Why is this critically important? Well, we're seeing it very specifically in terms of rate of change is changing. So the easy part's been sort of baked in terms of the economy. Aspects of the economy have bounced back. However, the trend is still going to be positive, like in terms of rebounding, but it's going to slow. That rate of change is going to slow. So it's not going to go back, and we're going to have these huge bounce back numbers that we once earlier did, because the easy part's been done. Now we're going to grind through the economy. If we look at payroll or just even jobs specifically, the most recent jobs numbers were revised. And if you look underneath the hood and look at that, you have sort of the private sector actually growing in very different subsectors of the economy. There's a lot of growth in the subsectors of the economy. And there's aspects in the public sector that are reducing or shedding. So very specifically, unfortunately, a lot of teachers, there was just announced 280,000 teachers across the United States in different states and municipalities have been sort of laid off. Why is that the case? Well, kids are not back in school. And if you have 20 kids in school, what's the difference if you have 30 kids back online in a Zoom classroom? Well, immediately you got, I mean, you could have 40 if you will. So if you have 40 kids with one teacher, you then just cut down all of the teachers that are needed across the United States. That's a travesty. It's horrible. It's heartbreaking. But all these municipalities and all these states have no problem laying off, and they're going to lay off a lot more teachers. You wait and see. Unfortunately, they're trying to ultimately take money and survive, to manage, take money from police, defund police, take money from teachers. And, they can leverage now, it's technology. They could have one teacher teach 40 kids on a Zoom call versus a teacher in the classroom to 20 kids ratio. And that's happening. That's literally empirical evidence happening. States and municipalities are asking for all of these reductions all over because they're trying to survive and reallocate their budgets because they want to manage their municipalities a certain way and their states a certain way, and it's affecting real life people, not only the teacher but the student. So this is tragic. It's absolutely disappointing. We're going to see a lot more public sector layoffs. Unions and a few others are just going to continue to lay off. And then you're going to see different private sectors like warehouse jobs. That is growing by 150%, simply because the companies that go out there and deliver, I can't say specific companies, that's why I sort of hold back, but there's companies that deliver packages that we order from, and you get a package to your doorstep in 2 days. At the latest. And so they need fulfillment centers, and those are growing again tremendously. So private sector is growing, U.S. economy is growing and it's expanding, but it's being offset by the public sector. Unfortunately, teachers are being laid off. So we're going to keep in mind that Congress needs to do their job. They literally need to do their job and get back to work and help. And White House has to get on board with whatever sort of terms of the deal and the structure that they agree with. But again, as I keep saying, don't hold your breath. They agree to disagree. But now it's going to become, the longer this waits, more persistent and weighing on the long-term damaging effects of the U.S. economy. So that's it. Let's keep an eye on this. And hopefully this turns for the better in the next couple of days, maybe even weeks as we get through this. But thanks for watching. And if you have any subjects you want me to cover, please send them in. We are trying to cover any aspects or any questions you have at home. And again, continue to like and subscribe and share with friends and family. Take care and have a great day. So I almost forgot, I got my one last update. A lot of clients ask for this, and I constantly give an election update. Tonight, obviously, we've got the vice president debate. That's going to be exciting. Get your popcorn ready, and we'll see how that plays out. But right now, as of October 6th, yesterday, we had a update as it relates to the percentage odds of winning the White House for the candidates. Well, clearly Biden's been in the lead. He's consistently been in the lead. And so what the poll has showed, at least what they were reporting, is the odds is 61.2% on October 6th of 2020 for Biden. But what's interesting is if you go 4 years back and you look at, the leader at the time was Clinton, Hillary Clinton, and she had a consistent, clear lead, overwhelmingly. The betting odds at that time was for her 70% to win, and we all know how that played out. So I'm just pointing this out that this is 2020, anything can happen, but this does show that Biden is actually trailing the enthusiasm that Clinton had way back 4 years ago. So who knows? We can look back to this video and see if again, the modeling and all the polling was way off like it was in 2016. One thing is interesting to note, and I don't think that too many outlets, news outlets are reporting this, is that Biden is trailing Clinton as it relates to the odds of winning and the enthusiasm. So we'll see if there's an enthusiasm gap for supporters when it comes down to the election day on November 3rd. So that's it. That's my final topic of the day, and we'll see you again next time.